Good morning to all participants from the Northeast region of America and the Caribbean. Good afternoon to all participants in Africa and the Europe region. I think it's good morning time also in Europe. I can see a few participants who have joined us from the Asia region too. So good evening to them. On behalf of the CAFI SSF Secretariat, I welcome all to the webinar talk series. My name is Suchitra Upre, and I'm the network coordinator. Today, with great excitement, we bring to you the fourth knowledge sharing session on fisheries finance for this year. And it is the 14th one since we started the CAFI SSF webinar talk series at the beginning of the year 2021. The topic for today's discussion is access to value chain finance for small-scale fishing and aquaculture in Africa. And it is our privilege to organize today's program in association with two co-organizers. First, the Fish4ACP initiative implemented by the FAO and the AFRACA. For all those who may not be aware, the Fish4ACP is an initiative of the Organization of African, Caribbean, and Pacific States that contributes to food and nutrition security, economic prosperity, and job creation by ensuring the economic, social, and environmental sustainability of fisheries and aquaculture value chains in Africa, the Caribbean, and the Pacific. Fish4ACP is implemented by the Food and Agriculture Organization of the United Nations and partners with funding from the European Union and the German Federal Ministry for Economic Cooperation and Development, the BMZ. Our other partner, the African Rural and Agricultural Credit Association, is our regional partner organization for Africa. AFRACA is, as I said, being a regional association, is a lead advocate agency of Sub-Saharan Africa's financial and non-financial institutions that are involved in promoting rural and agricultural finance. It has over 150 institutions within the region affiliated as its members. The program agenda that we have for today is 3 presentations from the distinguished speaker panel whom I will be introducing to you all shortly and who have joined us today. After the presentations, it will be followed by the question and answer session. And thereafter, we will have a talk on the way forward and closing remarks from the CAFI SSF Secretariat Advisor. With this, we will now begin the discussion. And I would like to invite our first guest speaker, Mr. Gilles van de Waal. So Mr. Gilles van de Waal is the Fish4ACP Chief Technical Advisor. Mr. Gilles has been managing Fish4ACP, as I said, a large-scale fisheries and aquaculture development project since the year 2020. Before that, he has been involved in various fisheries development and research projects in Europe and Africa, always prioritizing participatory approaches. Mr. Gilles has hands-on professional experience in the fishing, fish farming, and processing sector. So Mr. Gilles van de Waal, over to you for the talk on the importance of value chain financing.
Thank you very much, Suchitra. Am I going to share the presentation myself? I don't know. I can do that, no worries. I'm just going to then share my screen. I can just check with you that you are seeing my screen.
Yes, we can see it.
Yeah.
You can put it on the, yeah.
Good like that? Okay, good.
Yes.
Well, good morning, everyone, and thank you, Suchitra, for the introduction. Indeed, my name is Gilles van de Waal, and I'm the coordinator of the Fish4ACP project, which basically has worked with AFRACA and other colleagues to assess the needs in terms of access to finance for the different value chains that we work with. So I'll just start by providing a bit of background on Fish4ACP and then zoom in a little bit on what are the needs that we can see arising in the different value chain in terms of the types of investment which are required, and as well give an idea of the overall investment level that we're looking for. And then I believe that afterwards, my colleagues from AFRACA and as well from the CAFI network will provide a bit more information about the lessons learned along the way in studying the financing needs for the different value chain we're working with. So just the overall goal of Fish4ACP is to really help fisheries and aquaculture value chains develop in a sustainable manner to contribute to economic growth, job creation, food security, and nutrition. As Suchitra mentioned, we're working in partnership with the Organization of Africa, Caribbean, and Pacific States for this project, with the funding of the European Union and the German Federal Ministry for Economic Cooperation and Development. And obviously, FAO is the lead implementing agency, and I'm coordinating the project management unit in charge of that project. As mentioned before, we work with 12 value chain, but if you heard well, we're actually working across 3 regions from the OACP organization, which is Africa, Caribbean, and Pacific. And obviously, this chat today that we're having will focus very much on Africa. So this is the top of the slide here, where you can see all the different value chains that we're working with. We're working with 9 countries in Africa, and given as well CAFI is mostly focusing on small-scale fisheries. I wanted to highlight in this slide those value chains which are only small-scale fisheries based, and actually not small-scale fisheries only, because we are working with both the aquaculture and fisheries sector. So highlighted in blue here, you can see that in Africa, we have 4 value chains which are predominantly small-scale. So in the Gambia and Senegal, these are the oysters value chain, which at the moment oysters are still harvested by hand, but are transitioning towards farming. And then in Sao Tome and Principe, we're working with the coastal pelagic value chain, and in Zambia, the small lake pelagics. And Tanzania as well. These are also sisters value chains. And then we have other value chains which have a dual component, if you want, both industrial and artisanal. And here we're talking about Cameroon for shrimp, Côte d'Ivoire for farm tilapia, where you have both small and large scale producers. Nigeria is the same. It's also a fish farm based value chain, also with small and large scale producers. And Zimbabwe, where you have only actually 1 large scale producer and all the others are very small farmers. So that to give you a little bit the artisanal dimension of the chains we're working with. For the other regions, I'm not going to go into the detail because that's not the focus of the talk today. Just to mention that the work to support value chain is embedded in what we call the Blue Transformation Agenda or Roadmap, which is really the framework of the Fisheries and Aquaculture Division to drive the sustainable transformation of the sector and sustainable trade and value chain, as you can see on the graph here, are actually one of the 3 pillars of that Blue Transformation Agenda, along with sustainable fisheries and sustainable aquaculture. And that Blue Transformation Roadmap is really instrumental in linking with the wider FAO strategic framework, which aims at improving food system through the food 4 betters: better production, better nutrition, better environment, and better life. Just a few figures on the project. So we work with 12 value chains, as mentioned. We have a total funding of 48 million euro. We are running until end of 2025, early 2026. And the way that the project is structured, just to put things into context, is in 2 main phases. The first phase is really to look at these different value chains and identify the bottlenecks that prevent the sustainable development of this value chain. And not only the bottlenecks, but obviously as well the leverage points. This is for the first phase, and that analysis of the change is turned into an upgrading strategy, which is developed and agreed with stakeholders. And then obviously the next phase of the project is the implementation of that of these strategies. And within that first phase, one of the specific analyses that we carried out was an assessment of the financial needs of these different value chain, and this is where we've partnered with the AFRACA for that work. But what are the needs that we've identified in the various value chains? If I can split the needs between the private sector needs and the public sector needs, starting with the private side of things. Well, you can see on the pictures, obviously, that these production processes are not happening in an optimal way. If you look on the northeast corner of the slide, if I may call it like this, top right corner. This is Nigeria, where smoking is one of the key ways of preserving catfish. And you can see that the smoking process there is definitely not optimal, neither from a fuel efficiency point of view, but as well as a health point of view, when you look at how that makeshift oven is functioning. Then on the top left, no, the bottom left corner, sorry. You can see some drying operations here on the lake, on the shores of the Lake Tanganyika, happening on the floor. Again, not optimal at all in terms of food loss and waste. Is not good at all. And then the bottom in the middle picture, this is Sao Tome Principe, where you have a nice mai fish in a dugout canoe there. So that gives you a little bit the type of fisheries happening there. Still very artisanal, and where the use of ice is very extremely limited. So this gives you a few examples of the needs in terms of financing, because obviously these stakeholders are mostly using these sort of processes because they cannot really access any other type, and financing is a key bottleneck in really being able to access more modern equipment, new type of production equipment. So yeah, but the needs as well arise for different reasons. I mean, as I mentioned, new technology or new processes are one, but you can also be forced by regulatory constraint to have to actually adapt, and you might not have the financing capacity to really invest to basically be compliant with the new constraint. You also might want to start a new business. That food safety, if you want to target new markets, you might have to adopt new norms as well. Cash flow is obviously another issue. So that's just in a nutshell some of the needs that we see arising in our value chain. They're not new, obviously. They're fairly typical and classical, but notwithstanding this, I mean, they are really a key constraint to expand or improve the businesses. In terms of public financing needs, there you have as well needs linked with assessment of production. We've seen that is a classic issue in most of the value chain we're working with. Most government don't actually really know what is the true scale of production, and what, if even more important, what is the trend really affecting the production? Is it going up, down? A lot of times we just don't know. Linked with this, if you don't know about your production, you very often don't know about your stocks either, and you don't have a proper management plan in place. So this is a key need which is related. Linked with this, it also stems from the fact that there's no monitoring system, and control and surveillance is very much lacking as well. All this is usually framed as well in a legal environment, which in most cases is patchy, or in the best case is patchy, and in many cases is not even existing. In some of the countries working with, especially on the aquaculture side of things, the legal framework is really limited. And then other issues linked with genetics, especially for farming, fish farming, very important to really have a good overview of the genetic of the population of fish that you're using. And again, food safety. If you look in the picture in the middle there, this is, I'm not going to mention where that picture was taken, not the country where it was taken, but you can see there's obviously some little issues going on there. On the right hand side again, at the bottom right, this is Sao Tome. You can see actually the type of boats which are being used there, which obviously, I mean, it's very impressive what the fishermen are managed really to bring back with these sort of very simple vessels. I mean, I actually saw a massive sailfish being really brought ashore with that boat, that specific boat. But still, I think in terms of safety and in terms of really modernization, I think there's something that can be done better. On the top left corner there, this is Senegal, where, as I mentioned, the transition towards oyster farming is ongoing, but really requires a heavy investment as well if it is to transition to modern techniques. I'm not going to dwell too much on this, but this is how basically the value chain strategies that we've developed translate into practice with different strategic axes, trying to tackle the different elements of affecting the value chain. All these strategies are available on our website if you want to have a closer look, obviously. This is my last slide, and actually gives you an idea of the level of investments which are required to bring, that we've assessed, which are required to bring these value chain up to the next level. In total, for the 12 value chains, we've assessed the needs are around 140 million euros in total for the investment, with a share of the private sector, which is around estimated at around 60% of that investment that should be coming from the private sector. So that gives you a scale and idea of the needs in terms of the financing for these various strategies. Obviously, that overall picture hides quite a high level of disparity between the value chains and between the strategies as well. We're working with very small value chains like the Gambia, where the total production is only a few thousand tons a year, while Nigeria is at the other end of the spectrum, where we estimate that the total production in Nigeria could be up to 1 million tons. So obviously, the size of the investment required is absolutely not the same in the Gambia or in Nigeria. Doesn't mean that the needs are not very high, but the scale of investment is completely different. And then as well, we've noticed that the approach taken by the different value chain in terms of the strategy is different. For example, in Côte d'Ivoire, the total strategy has been estimated at a value of around 60 million in terms of the investment required. So that's quite high, and that probably really then includes and involves all the investment needs required to bring the Côte d'Ivoire value chain to the level that it wants to reach, which is a tenfold increase in production, by the way. But then in Nigeria, you look at the strategy at the moment, the way it's been developed, and this is not a strategy that fully encompasses the full development spectrum, obviously, of the chain, which with 1 million ton would not go anywhere with 7 million euros. So this is as well a little caveat that the approach to the strategies that were a little bit different in the country by country basis. And I think I will leave it here so that we have more time for the other presentation and obviously for the discussion afterwards. So thank you very much, Suchitra. I'll be happy to answer any question at a later stage.
Thank you. Thank you, Julius, for giving us an overview of the Fish4ACP project and highlighting the various regulatory, food safety, production and financing needs in the fisheries and aquaculture value chains in the select countries. I'm sure participants are going to have a lot of questions about the investments later. So thank you once again for joining. And with this, we would like to move to the next presentation for today. It is by Dr. Thomas Gibson. Dr. Thomas Gibson is the FAO International Consultant and has been working for various projects for Africa, in Africa as well as Asia. Dr. Thomas has acquired his PhD from St. Gallen University of Switzerland with a focus on microfinance and banking in developing countries. Dr. Thomas has several years of experience in development finance in various countries. He's currently working as a senior portfolio manager for the German Development Bank, AFW, and handling a portfolio of projects in South Asia and consulting for the FAO on how to improve financial service provisions to small-scale fisheries. So, Dr. Gibson, over to you for the topic on financing small-scale fish value chains and the findings from the 9 African countries.
Thank you, Suchitra. Let me try to share my screen as well, and please give me a thumbs up if you see it. All right, should be in full screen now. Very good. Thank you, Suchitra, for the kind introduction, and hello to all participants from all over the world today, which I think is very cool. Jill has already given us a very good introduction into Fish4ACP overall. And basically what I'm going to do today is 2 things. First of all, it's going to be a commercial for a brochure that we have just been uploading to the internet. So my first objective of today is to get everybody click on that link after today's presentation. And then second of all, I'm going to tell you about the results of one of the key activities within the scope of improving access to finance for these 9 African fishing and aquaculture value chains. So while Jill's presentation, I think it's important to understand, I mean, there's upgrading strategies for the value chains overall, including technology and everything around it. Here we are looking purely at the financial component. So I'm going to be only speaking about the question of access to finance for those participants in this fishing and aquaculture value chain. So it's important to understand the difference a bit. I think ultimately the goal must be that finance and every other improvement, be it on technology and so on, should go hand in hand. And I think that that's ultimately the way to develop then value chains. Jill has already alluded to it. Actually, this assignment where we were really wanted to look at the 9 value chains and the state of access to finance and how possibly to improve access to finance for these participants of the value chain was assigned to AFRACA. So AFRACA was assigned to help FAO with the analysis of that topic, simply for being an institution that has a very strong foot in the door in many of the member states, or almost all of the member states of the Fish4ACP project in Africa. So we wanted to really use the experience of Africa to get access to those those value chains. And I put for you on the slide an overview over what the assignment looked like. So basically, you know what the basis of the lessons learned that I'll be presenting today are. And the basis, basically, there's several elements which I've put here on the slide. For each of the 9 value chains, we basically did 3 analyses. One was a stakeholder analysis, so looking who is even a relevant stakeholder when it comes to access to finance in that value chain. The second analysis we did was looking at demand and supply for financial and insurance services, I shall say, in the value chains, although insurance, I must say, it stopped to be a focus of our analysis later on, and maybe I can say a word about that later. And third, for each of the 9 value chains, we undertook an analysis of the financial policies and regulations, or the policies and regulations that are valid for providing and demanding financial services in these value chains. And then basically these 3 elements, they culminate in a value chain financing strategy. So that's distinct from the value chain upgrading strategies that Jill's mentioned, because these purely focus on the financial aspects for each of the 9 countries. And you can see it's quite an undertaking because it actually took 1.5 years from starting the stakeholder analysis to finalizing the value chain strategies for the last country. And AFRACA, in mode of how we worked on this, hired local consultants. So we had local consultants to go through the field in each of the 9 countries to do survey work, desk research, to do interviews with people. And FAO, the team from FAO, we sort of technically supported AFRACA throughout the process. My focus of today, I'm going to be presenting you mostly the lessons learned from these 3 analyses that we have been undertaking for the 9 countries. I'm not going to go into detail of the value chain financing strategies for each of the countries, because that would be too much for one day. This I can basically skip because Jill has already given us an introduction of which value chains we're actually talking about. 9 of them in Africa, and the AFRACA assignment focused on those 9. And from here on, I'm going to be presenting you a few lessons learned. I mean, I know this is just being really snapshots of the many things we have seen throughout the whole analysis, but I think we managed to distill it down in the brochure that we have just published to a few interesting findings, which pertain more or less to all of the countries. So there are certain things that you see almost everywhere when it comes to access to finance for such value chains. Of course, there are distinct differences, and I'm going to speak a bit about that later, but there are a few things that you just always see, and I think this is something we've tried to distill it down to here. So basically, in almost all of these value chains, with the exception of a few larger scale producers, you see that informal finance arrangements still prevail. So people use a lot of informal finance, meaning they would get their financial needs serviced by friends, by families, by savings group that they organize themselves, instead of going to formalized and regulated financial institution. And generally, I think what's interesting to know is not really because there aren't any financial institutions that you could go to. I mean, some of the numbers, I couldn't even believe them when I saw them. In Cameroon, you have 17 commercial banks, you have 419 licensed microfinance institutions. Obviously, some are like super small, but it's an incredible number. Even in the Gambia, which is a really small country, we saw that there's 112 MFI branches. I mean, obviously, some of them also being really, really small, but there is a certain level of outreach by the financial sector in all of the countries, at least physically. Likewise, in Cote d'Ivoire, 73% of the financial institutions we interviewed, they said that they do actually have the tools to address the value chain, including physical outreach. So that, I think, is a first lesson learned. And then the lesson learned, which is not such a nice lesson to learn, is when you ask yourself the question, so why are informal arrangements so common? You must come to the conclusion that this is a problem which has many, many facets to it. So there's just not that one single thing that you could change and then all of a sudden the formal financial sector would be booming. So there's questions of financial literacy. There's insufficient documentation by many of the producers in these value chains, where simply as a bank, you cannot know what they are, what they're actually earning. There's inability to meet collateral requirements everywhere. I mean, this is a very typical story in the financial sector. Sometimes the loan terms, what the banks offer or the microfinance institutions offer, is just simply inadequate. And sometimes it's really because also the financial institutions, they wouldn't really understand what the value chain participants are doing, so they wouldn't want to, see them as a client because they wouldn't really understand the business. So many, many things. And unfortunately, I mean, this is one of the messages. There's no silver bullet when it comes to formalizing financial sector. But I also wanted to ask here, a bit provocatively maybe, is informal finance always such a bad thing? And if you look at one example from the Gambia, and Jill mentioned the oyster producers in Gambia, I mean, that's actually an informal arrangement which seems to work quite well, where people, in this case, particularly women, they have savings group that they organize themselves, and they everybody pays in, and then you're able to borrow from that savings group. So it seems actually to work quite well, and it's a very good way of organizing things. But keep in mind that in an informal arrangement, what we often see is that businesses with really good prospects, so the one that could actually really flourish, had they better access to finance, they just don't get the financing that they need. It's just because informal finance is limited. I mean, there's only so much that your friends are going to give you. And in the case of Gambia, we saw that the maximum loan amount per season is 38 USD for a woman borrowing in that scheme. So that might be enough, you know, for keeping your business running. But if you really have a good idea on how to grow your business, it's just most of the time probably not going to be enough. So informality, while it can work really well, it's probably often going to stop you from growing your business because it's just not going to be enough for your financial needs. Another thing, I mean, this is something a little bit I did research on in former times, is that formality has its merits when it comes to shielding people against over-indebtedness. Because sometimes when your business fails, your boat sinks, and then you have been lending informally in your social peer group, it might actually put you in a very tricky situation. While if a financial institution manages as a professional financial institution, you might actually face a better treatment, for example, for restructuring your loan that you borrowed for. This is, of course, not always the case, but in some cases, definitely formality can help you to be shielded from social pressure and over-indebtedness. If we of course we asked why we asked the financial institutions, and we also asked the people and the producers, like, why are you not getting credit for the ones that weren't really getting them as much credit as they wanted to? And three things stand out. The first one is not surprising, is a lack of hard collateral, and many financial institutions will ask for collateral, and they will ask for collateral for good reasons, and they will ask for collateral for many reasons also. It's not just because they have to for regulatory reasons, but often it makes actually sense to ask for collateral. So this is the usual story. I don't want to go into it too much. Many microfinance institutions have tried to alleviate that constraint, sometimes very successfully. So, but this is just still the reality in many of the small scale markets. Another thing that I find a little bit more interesting and more specific to the case here of the fishing and aquaculture producers is that they tend to have a fairly bad reputation at the financial institutions. Now, to what extent that also applies to other customer groups, I don't always know, but we did definitely see that the reputation of many of those producers at financial institutions was fairly bad. The financial institutions saying they're too volatile, they move away, they don't have the necessary discipline to repay on time. So this is something we've been hearing a lot. And I think this is something that can also be worked on. I mean, for now, I put it out there as a fact, but this might actually then be something that can be worked on. And the third one, it's also something we've been hearing a lot, is that many of these producers, they don't have a proper business plan with solid finances. I mean, this is also no surprise, but it's also something that, you know, you might actually work on, because this is something that if a producer is willing to change it, I think with a proper training and capacity development, a producer will be able to change it. Not all producers will be willing to, and I'll be saying something about that later on. Another thing that's obviously interesting and a topic that we hear about a lot is digital financial services, and to what extent are they being used in these value chains. So I would say what I call here core digital services, which is mobile banking and mobile money, so e-wallet kind of services, those are used almost everywhere nowadays in the 9 partner countries. This you will see is a widespread type of use of those services. In some countries more, in some less. I mean, I put here a little bit of an arrow where, and I have to be a bit careful, of course, here where I show that, okay, in some countries a bit less developed, the market in a country like Tanzania is much more developed when it comes to access to digital financial services. But the core ones you see almost everywhere. Beyond that, though, I mean, beyond core digital services, you see very, very little happening, or we saw fairly little happening. For example, sales data, digitalized sales data on your phone. price information on your phone. We've seen it. We haven't really seen it much. This is something that could actually boost, access to finance, because as a bank, if you have reliable data on sales, for example, this could give you some comfort, and you would be able to approach a client with that. Of course, it comes at a price of transparency and also a fear of taxation. So let's be realistic. I think many very small scale producers will also never want that, right? Because they prefer to stay in the cash-based informal way of doing business, because simply they might fear of taxation or other things, or people for any other negative reprisals that they might fear. So I would say in way of financial services, I think it's something for a little bit larger producers. And then also it could be very interesting at aggregation and wholesale level. So I think if I wanted to design a program, I would try and start with the larger scale producers, or at aggregation and wholesale level. So when produce is aggregated and then further shipped, I think there you have there's more leeway to work with introducing more digital financial services. If you're interested in generally on digital financial services, I think the World Bank's Findex database is an interesting read, and have very good data on Africa as well. The third one, and I know I'm running slowly out of time. The third lesson learned is something that I find really, really important to keep in mind. This is that there are very important distinctions to make between the genders. Generally in the value chains that we have been looking at, and specifically also when it comes to finance, access to finance. It simply is the case that in almost all of these value chains, and Jill, you might correct me here, but you're more of an expert than I am, but almost always is there a separation between traditionally female and traditionally male tasks. While from my point of view, the female tasks are predominantly involved in later stages of the value chain. So the fishing, for example, will be done by the men, and then the the landing maybe still by the men, and then further on production of the produce, the women will start to get involved, or in selling, the women will start to get involved. There are exceptions, of course. The oyster value chains in Gambia and Senegal are exceptions, where you see basically these are value chains that are very much driven by women, which for me was very interesting also to see. And I don't want to go into that more than that, but the lesson learned here is if you separate the value chain, or if the value chain is separated to some extent by gender, that also means that you have financing needs that have to keep the gender component in mind. Right, as simple as that, because if a different business means a different financing need, and if the businesses are somewhat linked to gender, then it also means the financing needs are somewhat linked to gender. Of course, it's not as simple as that as a bank, because often the financing that you provide, it will mix at the household level, right? So let's say the husband, he takes on a loan, then unfortunately, in some cases, repayment will be done by the whole family, right? So in the end, for a financial institution, often this mixes at the loan level, but still, it's something to keep in mind. If you look at an example from Zimbabwe, we saw that simply in terms of availability of collateral, like female value chain actors are at a big disadvantage, because the consultant told us that 25% of them have land tenure secure, and 50% of the men do. And if you see that land is a big part of being able to access finance, having land tenure, then that tells you something about the disparity of access to finance with regards to gender. There are some, I think, also sometimes successful examples on working on that, institutions in particular that address women or other disadvantaged actors in particular, like the Zimbabwe Women Microfinance Bank. Don't want to go into detail here, but I think in my way, that's usually a good strategy to address this issue. These issues are very difficult to address. Those are entrenched in the societies, but I think some of the institutions that specialize in it, they have been quite successful examples. So this is the commercial break. This is the brochure we have been writing. You find the link, and I'm sure, Suchitra, we can share the link later on with the participants as well. We have a little bit more in there on the use of insurance, which spoiler alert, very limited, and also something on policies and regulation pertaining to financing that could also be interesting for some of the participants today. Now, what I have been speaking about, and maybe we can get into that a little bit more later, is obviously the financing strategy. So the strategies then actually coming up with some ideas on how can we improve access to finance in these value chains. I put down 2 examples. One is from Zimbabwe, where the idea was to work closely with a producer association. So producer associations can be an entry point for training people, for upgrading their technology, and then getting them together with financial institutions. The other one is from Sao Tome and Principe, and I think, Suchitra, you are working on that one as well, which is really about helping people to save. So it's very basic intervention in that sense, but helping people to save. And from that could evolve, a formal financial relationship with a bank or microfinance institutions, should it be needed for the people. Not everybody needs it, but for some of them, it might be an entry point to becoming bigger business and growing into something more formal. This is my last slide, and if I wanted, and obviously, I mean, there's so much you can do, and there's a whole ton of literature out there when it comes to how to improve access to finance in agricultural value chains, and in microfinance in general. And I don't want to repeat very general things here, but if there's one takeaway that I had after reading all the reports from the 9 value chains, is that you need to work both on the demand side and on the supply side. Basically, you cannot just work with financial institutions, and you cannot just work with producers in the value chains. You have to work with both, and you have to get them together. That, I think, is the only way to kickstart lending. And again, there's no silver bullets there, but I think when you increase exposure of the 2 sides to each other, sometimes good things can emerge. In some countries, obviously, I mean, this is a very general statements. In some countries, of course, the situation begs for a more specialized approach. I think for Zimbabwe is a case, for example, where macroeconomic risks are just really very difficult to deal with for financial institutions. So you have to kind of think about how can we take maybe some of these macroeconomic risks out of the equation so that banks will, or microfinance institutions will feel more comfortable lending to small scale producers. In other countries, that might not be so much of an issue. In some countries, you have really interesting, as I just said, producers organizations that could be a good entry point into increasing access to finance. And sometimes matchmaking between financial institutions and producers could really get things going as well. A word of caution, of course. I mean, some of the value chains, particularly I was looking at Zambia, for example, sometimes it will be very hard to get financial institutions interested in these value chains. And not always is it also needed that people start borrowing formally. It is only needed if it really has prospects into growing a business. And this is something we should keep in mind. So we should try and identify very clearly the cases where we see good opportunities, which definitely are available and they are around. And then we should focus on those. And sometimes, sometimes you might also come to the conclusion that, hey, the way it's currently working, the informal finance arrangement that people have found is an okay way to deal with the financing needs for these people. So maybe let us focus on something else. That's a word of caution with which I want to conclude. Thank you very much. I'll be happy to take questions.
Thomas, before you finish, can you just go back to the previous slide? Okay.
This one.
Yes. So
sure.
Sorry, I'm just adding a little bit over here.
No, please come in. That's why I mentioned your name.
Yes, thank you. So I would just like to share a little bit more insights in addition to what Thomas has spoken about, particularly for Sao Tome and Principe. So as he was talking about certain countries in the previous where there are about more than 17 bank financial institutions and more than 400 microfinance institutions which are operating. But the other end of some of the countries, like particularly Sao Tome, which supports mainly the artisanal fisheries sector, and this country has mostly pelagic value chains, pelagic fisheries, That's what they operate on. The kind of environment over here that they have is more than around 69 to 70% of the people do not even yet have bank accounts. And when it comes to the fisheries, people involved in the fisheries sector, I think based on Fish4ACP's value chain analysis study, based on the data that they have sampled, it has been stated that around only 11% of fishers have bank accounts. So that's the point from where the thought process for the strategy is beginning to evolve. And that's what is being discussed, that potentially for this kind of a structure where financial mainstream finance is not even anywhere close by right from bank accounts. So that's why something like self-help groups, which is one of the models, successful models that has already been implemented in Asia, and countries like India and Bangladesh are already doing it. So we thought this kind of SHG model can also be implemented there, where the social capital and the groups can act as collateral. That's how the mainstream financial institutions can begin to provide access to finance to these kinds of sectors. At the same time, it's a country where more than 30,000 around 30,000 population is involved in the artisanal fishing fleets, and a majority, 50%, as Thomas was also talking about, and even Julius was saying that around 50% of the population is usually engaged in the post-harvest sector, and these are mostly women in the marketing as well as petty post-harvest activities. So considering the lack of, as Thomas was saying, the lack of suitable financial services, which are one of the biggest constraints and commonly identified constraints in the SSF sector. So we thought this could be a suitable strategy to begin with for the South Dome region, and to make sure and to bring access to value chain financing for this particular segment. So that's what I just wanted to add. Yes, Thomas, please go ahead.
Thank you, Suchitra. And I mean, you're certainly right. Sao Tome and Principe is certainly one of these examples which are extremely informal when it comes to access to finance, extremely informally organized sector. So where you start really kind of at the bottom, starting to build trusts and savings and financial institutions. And obviously, I mean, for the country, that value chain is very important, right? Given its location right in the middle of the ocean. So I think that is much appreciated. And as I said, I mean, I was at the end. I'm looking forward to more of these discussions today or anytime later on. You see my email address in case there's any questions anytime. Thank you.
Thank you. Thank you, Dr. Gidson, for sharing the insights of your research and such an in-depth discussion on the strategies for the various Fish4ACP countries. I hope it benefits the countries as they continue to take these inputs and more discussions happen on how the strategies could be implemented further. So thank you once again. And with this, we would like to move to the next presentation, where I would like to invite Mr. Thomas Essel, the Secretary General of AFRACA, that is the African Rural and Agricultural Credit Association. Mr. Essel has provided leadership in collaboration programs with governments in Africa and several development partners. Before joining AFRACA, he worked in the Bank of Ghana as head of external financial relations and head of the Bank of Ghana initiated Ghana incentive-based risk-sharing system for agricultural lending, which is called GIRSAL, by providing strategic and technical guidance to the management. So, Mr. Essel, over to you for your talk on scaling up value chain finance in Africa.
Thank you very much. Suchitra, for the kind introduction. Good. Hello. Okay, let me set my, okay, good. Thank you very much for the introduction, and also for the first two earlier presentations by Gail and Thomas. All the topics are related to value chain finance. So I was wondering how I can get something that will not bring duplications. But I will start from where Thomas was trying to get to the end. That if you want to look at a strategy for financing value chain, you have to look at both sides of the coin. That is the demand side and the supply side. And when we come to my topic, which is scaling up the value chain finance in Africa, you really have to go down to know what is happening at these places. It is what happens there that will bring some kind of attractiveness, that can invite investors and financiers to support. So I'll quickly go through, since they have made those two presentations. I'll have a short introduction, the structure of the fishing sector, scaling up agricultural finance, value chain finance in Africa, and then Africa's work with the FAO in small-scale fisheries in Africa. Okay. We can see that Africa is positioned in a way that predisposes it to a lot of advantages. And despite this, we still have challenges. If you take the natural resources that we have for development, land, we have about 65% of the world's uncultivated arable land. When you come to the waters, we have 38 countries bordered by the ocean or the sea. And we have a total coastline of about 47,000 kilometers. Apart from this, we have 300 days of sunshine, which can help us to promote renewable energy. Oh, sorry. Okay. Yeah. Now, the value chains that we have in Africa, we have two major types, the one for agriculture and then the one for fisheries. And both of them have the potential to improve our food systems to feed the continent. We have more than 60% of the working population working in these areas. And according to the African Development Bank, we still remain net food importers. And the cost of Africa's annual food imports could go from about 50 billion now to about 110 by 2030. So this means that we need urgent actions to increase food production. And these have become topical issues that experts keep on deliberating on them. Our ability to ensure food security in Africa will be enhanced if the fisheries value chain is upgraded alongside agricultural value chain. The agricultural value chain has received a lot of support because the attention of governments and policymakers went there earlier. And so they are a bit more developed than the fisheries value chain. And so developing the fisheries side will complement that to increase our food systems strategies to feed ourselves and to export. Currently, if we come to aquaculture, the fisheries sector is the one growing faster than all continents. From work done by FAO in 2000 to 2020, AFRACA had increased by about 463% in growth, whereas the second, which is the Americans, was about 207. So it means that there is a great potential that we have in the fisheries sector to help us create opportunities for employment and to increase our livelihoods. Fisheries and aquaculture sector currently employs not less than 12.3 million people. But industrial fishing threatens these livelihoods. There are a lot of illegal activities going on in our seas. Most of their work is unregulated, and this creates a lot of problem. They don't report on the activities that they are doing. They are not monitored well by our governments and our institutions. So these are even crippling the artisanal fishes, which dominate our fisheries sector. Good. Right. Now we look at the structure of the sector, the fisheries sector. We have the artisanal and then the industrial fishes. The artisanal is the simple one that our communities, the method that they use to go to sea, using simple boats along the coastal communities. You have hired crewmen in them. They use drift nets, seine nets, and then long lines. They are not sophisticated. And so the volume of fish that they catch are not as much as the industrial one. But when you put all of them together, they are doing a fantastic job. The industrial sector has big equipment, including trawlers and distant water fishing fleets. Some of these are even joint ventures. So with capital from abroad, they are able to support them to expand and to operate in our waters. If you look at the structure, men generally are involved at the upper part of the chain, where they go to sea and they are at the production side. So if men need more investment, it is for the production side to acquire boats and equipment that they use for sea. Women normally invest in the lower side of the value chain, where you have the processing, that is purchasing, processing, retailing, etc. And these fish that are brought from the sea are sold directly at the beach to various traders who also become part of the distribution system to other places. Key activities in the fisheries value chain include fishing, that is from the seaside or rivers, aquaculture, trading and processing, transport, wholesale, and retail making. One significant thing that is dominant in our processing of fisheries in Africa here is that we more primitive technologies. If you go to many of these coastal towns, you will see these ovens that are used to smoke fish. And sometimes the kind of smoke that you see coming from these, you see that they process with little or no regard for food safety regulations. But with some simple technologies, things are beginning to change, but it is very gradual. Still, the primitive technologies abound in many places. And most retailing takes place in urban open air markets. You go and see fish in a tray displayed in the open. And these may need to be done in an improved way, in a hygienic way, to improve our diet. And then we also have the sales of domestic fish products in modern retail markets, like the supermarket that we have, are limited. But it is something that is growing. And I think this is an area that we have to encourage our fishers to produce in hygienic conditions, process them so that they will be attractive to the supermarket, and also reduce spoilage. Now, the spoilage issue is becoming higher because climate change issues have increased temperatures, especially in Africa, and with hot conditions where you don't have iced containers to store them. In a short while, they get spoiled. So now, how do we scale up? In scaling up, we have to eliminate or minimize certain challenges that confront the fisheries sector, particularly the artisanal sector in Africa. With our growing population, our people have to be fed. They will have to be employed. But the sector is characterized by, if even those doing aquaculture, sometimes they may not have quality fingerlings. So if you don't have quality fingerlings, then the end product will be a suspect. The technologies that are used are very low, weak value chain linkage, low capital investments. Those who can support the sector only support manner. If you go to our local financial institutions, yes, some of them lend, but they lend, the size of the loan that they lend to the sector sometimes leaves much to be desired. But of course, they want to protect their capital. So if we want them to scale up, then there are certain things that we also need to do. We have weak markets. We have limited legislation or policies designed directly to boost financing of fish species. So our policies are also an area that I would say need a lot of importance. Our government, if you look at the policies that we have for artisanal fishers and industrial fishers, you can see that they don't favor the artisanal fishers, even though together they produce much of the fish that we have. There are times that they impose a closed season, which of course is good because of conservation. But whilst doing this, the industrial ones, which can go deep into the sea, are able to go through the waters, fish in the waters, take them away. So they rather have easier means of fishing in our waters than our own artisanal fishers. And because they can be monitored, there are stringent measures against them. Those that cannot be monitored, they take advantage and use all illegal sorts of means to take the fishes away. And they are currently even over-exploiting the fish that we have in our waters. I must say that the lifeblood of every value chain to make it attractive to financiers or investors is the abundance of the goods that are produced. If it is fish, there must be abundance. They must be produced in a hygienic way. We must package them well. These are the things that will make them attractive. But if some people are over-exploiting them and taking them away, and we are not conserving them, and we have only few of them, then how do we get that lifeblood which can attract financiers? So scaling up, there are things that we have to do. Governments must be strategic and have these objectives. One is increasing fisher production and quality. And increasing that will mean that when you create an environment that enhances sustainable production, all the time you have access to fisheries. And then the quality in terms of safeguarding the fish from going bad, adding greater value along the value chain. When they are sold from the seashore, what happens? Are they put in fridges? We have visited some shores in Nairobi here in Kenya, and you go to the shores and you see that they have very minimal storage facilities. So much of them will have to be carried in taxis or trotros or matatus, public transport, to wherever they have to go. And these can make the fishes lose their value before they even reach their destination. So along the value chain, we need to add value. From the fisherman to the trader, from the trader to the processor, all along the chain. From experience, we need to increase value creation along the chain. And then one important thing, which is very key, is expanding farmer or fishery actors' engagement with markets. The challenge that many of our producers, whether in farming or in fishing, which has resulted in difficulty in payment of loans, is the fact that even when they have been able to produce, the linkage to market has not been so good. And as far as that linkage is not there and they are not able to sell, they cannot pay their loans. So they look bad always in the eyes of the financial sector. So creating market linkages. And this, I will say that it must be the work of all. Financial institutions themselves must help. Because once you find a market for a big farmer you are supporting, you are helping the farmer to operate seamlessly. And then government and development partner support. These are key. And I'm glad FAO is doing a lot, particularly in the fisheries sector, working with governments. So if we are able to do this, then we make the sector attractive to financial institutions, to investors, to donors, or to whoever wants to support the sector. I'm closing. This might be my conclusion. There are certain prerequisites to scaling up fisheries value chain in Africa. And from the experience that AFRACA has got with work with FAO in Africa, we have seen that one of the first things that has to change to make the sector attractive is the mindset of the fishers, the fishermen, the traders, those along the value chain. You see that it's just like picking oral tradition. They've picked some technologies and some learnings from their great-grandmothers and great-grandfathers, and it is difficult to change. If you go to them at the coast, it is very difficult to change. And so one of the first things is that change of mindset. And this must be through literacy and capacity building for the various actors along the chain. And here I must say that FAO has done well, even to AFRACA, because currently, because of the work that we have done with FAO in the fisheries sector in Africa, we have built capacity ourselves. And so now, as part of the training that we even undertake, we have included capacity building in financing fish. So it's a good thing that has been done. Institutional strengthening. If you go to these artisanal fishers, they have cooperatives. There are also the financial institutions. We should not take it for granted that financial institutions know how to lend to the fisheries sector. They must also be enlightened. They must build capacity. And so that must be a component that should be taken. And then upgrading of the value chain. The value chains that abound should be strengthened in many directions. Technology will need to change for the various segments. The people involved there must develop their skills, and then the strengthening of the link within the chain. So that if a fisherman needs net, there must be an input provider. If they want to sell, there must be the trader who must also be assisted to be able to pick it away. So there is need for strengthening, and then enabling policies by governments, which favor particularly artisanal fishers, which dominate in our continent. And then for the financial institutions, fisher folk need specific financial products that suit their operations. And this is where we are helping to build capacity. Financial institutions need to be educated and need to be supported to come out with specific products that suit the sector. And then partnerships between governments, development partners, and others are key. So given this, these are some of the things that we have to do if we need to enhance or upscale the financing of fisheries in Africa. There are a few key things that we are currently doing with FAO. We have just completed the Fish4ACP, which Girls and Thomas made presentation on. We also did the multi-MDF. And then apart from that, AFRACA also used the theme with which we worked with the FAO for the World Congress that was held in Mexico. And here I must also thank the FAO for supporting us to that Congress, which is an international Congress in Mexico. They even gave us a consultant who helped to present some of our presentations. And then with the experience we have also gotten in the fisheries in Africa, we also contributed to Kenya amendments in Kenya fisheries law. This has exposed us, so they invited us to make an input, which we did. So FAO has been good to us. And then apart from that, currently we are engaged in a program called Insights. It is a project that is looking at local food technologies in cities in Africa. And we are doing this with Horizon Europe. One area that we have taken interest is fish ponds technology. And we are even thinking of promoting this in Kenya. There is going to be a fair, an agric fair in Kenya here early next year. We may promote that technology. Going forward, we look forward to working with FAO in the fisheries sector, in the food systems, digital innovative financing, and then the environmental social governance. These are the key areas that AFRACA is going to work on in the next 2 years. So we look forward to working with FAO. On that note, I will say thank you for giving me the chance to share the general view of what we are seeing at the value chain front in Africa. Thank you very much.
Thank you. Thank you, Mr. SL, for sharing your thoughts and deep insights on the state of fisheries sector in Africa, particularly highlighting the challenges faced and how to overcome these some of these challenges to scale up the fish value chains with the support of various partners. It was also equally heartening to know that AFRACA has in this working in the with the Fish4ACP project and also with FAO so far, and with our partnerships being Viola Regional Association and our regional partner for Africa. It was nice to know that you said that even the capacity of Africa for the fisheries sector has increased. So that is, I think, we also take a little bit of credit on that because that is the main objective of the CAFI SSF network. And I still recollect our early discussions when we started way back in 2020. So I'm glad if our partner is, regional partner is saying, I'm sure the effect is kind of trickling down to your other member organizations too. So with this, thank you so much for joining us, Mr. SL. With this, now the forum is open for any questions from the participants. Yes, Mr. Prakash Das.
Yes, can you hear me?
Yes.
Yeah, this is the presentation from Dr. Thomas, second speaker. So it was very good, but I have just a small question that in the value chain analysis, I think one of the inputs was that financial service providers are not aware. So in my view, the strategy for value chain financing should include training and capacity building of the financial service provider, be it banks, the MFIs, because the first speaker also told that the financial service providers are not aware of these things. So I think unless we take them on board in providing training and capacity building, and that happens also in India also. We are facing the other issues like the collaterals. It is also here in it also there lack of collaterals, lack of awareness at the fish farmers or fishermen, but simultaneously the lack of awareness and the financial service providers, the personnel who are there at the ground level, there also it is also required to understand, to appreciate what fisheries its importance and its for livelihood of the fishermen and fishers. So that is my view. Value chain financing has to be successful. It is key that the second speaker he has enumerated that they have mapped the 9 value chains in the African region, and following the stakeholder analysis and due process. But unless the key point is that the financial service providers are taken on board in providing, educating them through training and capacity building, the entire chain may not be successful. That's my view. Thank you.
Thank you.
Thank you for sharing that. Maybe Suchitra, I will just a very brief answer. I mean, that's absolutely true. I mean, if the financial institutions do not understand the value chains that they could be looking at, then there's no way that they're ever gonna provide any financing. I think the way you want to set up this technical knowledge at the financial institutions, or the way you want to capacitate or train them, depends on the value chain. I mean, for some of the more sophisticated, technologically elaborate value chains, you might actually need almost technical personnel at the bank. But before, as a bank, you will start having technical personnel that actually can go out to a client and assess their farm, or before you want to hire consultants to do that for you, you need a certain level of number of volume of loans that you can see in this sector. So I think it depends a bit on where the sector is. Certainly it is true that the loan officer that working at the financial institution that has no idea, or he or she has no idea about the value chain, is unlikely to provide any financing. So you do need to capacitate these people. How technically advanced you need to do that, I think that depends definitely on the value chain you're looking at.
I have one question. I'm Mr. Maruti Upre, the ex-general manager of the NABARD, National Bank for Agriculture and Rural Development, and I work for the internationally in many countries. Now, the one lessons learned Mr. Thomas has told about the lessons learned, that is third, that is the gender aspect. In the gender aspects, definitely you cannot ask the collateral because they are mostly doing the fish marketing or purchasing of fish and all that. So you yourself has said that microfinance bank in Zimbabwe, which has been created, which has been good example for that, is some sort of brochures can be prepared for that. So it will be the good lessons for the other banks to learn from that. Secondly, one question is that the inadequate loan terms and limited understanding which you are discussing about it. For that, because every bank doesn't have a fisheries workers, if it is fisheries graduates or fisheries understanding people in the bank. So they can prepare a sort of a brochures on the particular value chain, which covers the technology and which covers the cost aspects and what is the requirement, how to approach to the bank and other things. This sort of thing has been done in the NABARD, like which is called a model scheme. For instance, for the prawn farming, how the prawn farming is done, what are the criteria for the selection of it, selection of ponds, and then where we can get and what is per hectare cost it is coming, giving the details, all these things. So this will help the bankers to go for the value chain financing is concerned. Thank you.
Good. That's good.
Thank you. I mean, those are really good points. I think I'd be curious to see such material. And it's clear also that when you prepare a brochure that a banker can actually use to go and assess a project, it must be a bit different from a brochure for an engineer. I have a finance background, so sometimes I also struggle with understanding the technologies and everything. So I think this is it's a good way of doing it if you have some sort of easy to understand, even for finance people, easy to understand manual to assess a project. That sounds like a good idea. I'd be curious to see one of those.
Good.
Yeah, just to add to both the questions and the thoughts shared by our participants. So I think the way, as Mr. Das was talking about, certainly training and capacity building is critical, both at the MFI institution level also. And the way it can go about is by, providing subject kind of, sensitization program that can be done whenever the training is happening for the new recruits or the loan officers. So depending on the kind of livelihood activities and in the areas where they are operating, these kinds of sensitizations can clearly be provided. And I think it happens in certain microfinance institutions which have successfully implemented few fisheries finance initiatives. So if we are able to catch it and, bring this information on board and provide them at the early stages, along with the support of these kinds of brochures or, cost estimates and initiatives, which a bigger financial institution like the national bodies or state banks can disseminate it to the various institutions. So these are some of the ways which can be kind of considered. Okay. So if there are no other questions, we can move.
Yeah, can I ask one?
Yes, please.
Yeah. First, I would like to congratulate you. You did a fantastic job. After long, I heard a very good presentation and everyone, and it was a pleasure to hear Mr. Maruti after a long time. But here my question is that we have been in Africa for many years. We have the best aqua farm in West Africa, maybe all Africa with AAC certification, but there is no bank or institution who comes forward to give any money, financial help to us. We have tried the whole chain from Aqua Spark to you name it. We have knocked the doors. But for some good reason, they ask for the same collaterals like giving a house loan. They don't even consider pond and fish in the pond as a collateral. So there's a structural problem we have here.
So, take into consideration, this is Rajiv Banerjee, right? Okay.
Yeah.
So, Mr. SL, do you want to share your thoughts since you have a lot of member organizations?
Yeah. Thank you for the question. And the issue you have raised is very true. In Africa, this has also persisted for some time. But currently, you see that financial institutions, I worked in a financial institution before. They don't give out credit or loan when they know they don't have guarantees that they can get it back. That is their character. But then, because of the work that has been done in this area, some of the financial institutions, especially microfinance, they are beginning to see the big opportunities in agriculture and fishing. And in Nairobi here, there is one, it's almost now the biggest bank in East Africa. What is even their name? Equity Bank. They looked at the agricultural sector and then they saw the opportunity there. They lowered their interest rates. They spread, and then now they are one of the biggest banks. What banks in Africa, some of them are doing currently, is that some of them are trying to understand the sector itself. And those who have understood, they have begun to look at the collaterals even in a different way. If now, from the work that we did with FAO, even in Kenya here, some of the things that the banks are doing is that they will want to see even your cash flows. They can even look at your mobile phone to see how your cash flow goes, the monies you get, how you spend. It gives an idea that you are a better spender of money or a bad spender. So some are coming out with lower level of collaterals. There are some who will say, okay, if you have cow in Kenya here now, the bank will have a tag. In fact, because of technology, Kenya, we are technology, they can put a tag on the cow's ear so that the cow can be monitored. And then, so you use that cow as a collateral and the bank takes it. A bank like Cooperative Bank, which is one of the top big banks in Kenya, accepts collateral in the form of cow. So what I will, those that I want to advise are not here, is the financial institutions. There is a lot of opportunities in fisheries and agriculture. They should study the sector and then come out with innovative products. And that is key. Once you see the risks that are there, you come out with innovative products and you enter the sector, and it is a good ground for that. So that is it. But I think that governments must support, development partners must also support, particularly if there are financial institutions that are doing very well. I think that they should be supported through blended financing so their costs will come down. Once their costs come down, if there are farmers or fisher folks who are doing very well, naturally, they will look up to them. So that is a little I have to say on that.
Thank you. So, okay. So I think with this, if there are any more questions, feel free to write to us, and we can also share the questions with our speakers also. With this, we will like to move to the next speaker, Dr. Raymond Van Androoy. Dr. Raymond is the Senior Fisheries Officer and the Team Leader for the Fisheries and Aquaculture Division at the FAO. Dr. Raymond works for FAO since 2000 and was posted in several countries. He currently leads the FAO's Fishing Technology and Operations team. His main areas of expertise are in fisheries development and investment, techno-economic assessment of fishing fleet performance, safety in fisheries, emergency assistance, and fisheries microfinance credit and insurance services. So Dr. Raymond, over to you to share your thoughts on the way forward and the closing remarks.
Thank you very much, Sushita. And thank you all for this useful discussion. Indeed, the training of financial service providers is important on the fish value chain and its business functioning, of course. Microfinance banks' experiences should definitely be shared more than we do currently. And these brochures, for instance, that Dr. Upare was talking about are very good tools. I believe that NABARD experience could be very useful for many other banks, that they can learn from them. So this transfer of information is really useful. There was this question from Mr. Rajiv Banerjee on aquaculture in Ghana and the financing options. From FVO side, we will certainly follow up with him after this meeting. We have a financial service expert also in our office in Ghana, Mr. Massimo Pera, who will be able to probably give some advice. Today we have heard about the tremendous work of AFRACA and the Fish4ACP project in carrying out pre-feasibility studies into value chain financing of important seafood or fish value chains in 9 African countries. I would like to thank Gilles van der Wal, Thomas Essel, and Thomas Gietsen for your highly informative and clear presentations on the Fish4ACP value chains, the finance study findings, and of course the AFRACA work and Africa experiences on fisheries and value chain finance. These are very useful. It is clear that the studies show that not only the need for financial services by value chain actors, but also the opportunities provided by financial institutions are there. The studies increased awareness among financial institutions in the 9 countries and contributed to the development of practical strategies for financing the various value chain development needs. In many of the 9 project countries studied, the development process of financial products and services that meet the needs of the value chain stakeholders is indeed continuing in these months, and various instruments are being used, such as described by Thomas Gietsen. There are, for instance, risk sharing schemes, matching grants, self-help groups are being established. We are increasing the scope of microfinance schemes and amending some credit programs of rural banks together with the banks to address better the needs of the various value chains in the countries. The work is this ongoing, we can say, and will hopefully result in value chains that are stronger through increased access to finance and investments. I also believe that the work will inspire and motivate many other stakeholders in other countries throughout Africa. And I would like to thank, of course, the whole team involved in the value chain finance studies, of which a summary was presented today. First and foremost, our colleagues of Africa, after all, they were key in the development of this value chain finance studies. I would like to thank very much our Secretary General, Thomas Essel of Africa. He did really great work in coordinating with his members, and he was members of his team in the secretariat, such as John Amimo, Carol Banking, Nestor, and Peter. A great team to work with. Thank you for the excellent work you did. Of course, we shouldn't forget also about the national level experts in the 9 countries, which did great research, and their knowledge of the local situation made it possible for the Africa Secretariat to finalize the pre-feasibility studies. In total, they all produced together 36 reports, so that is really a lot, and that is in just about 2 years. So really excellent. From the FVO side, we had Thomas Gietsen involved, Lixia Yang, Yun He, Alexis Nasbimana, and Pierre Kouakou. And of course, from the Fish4ACP team, also Gilles van der Waal, Andrea Zamparelli, Massimo Pera, and Doigo Makta of our team were involved and contributed to all the studies. We were also supported by a Fish4ACP project management unit, staff, and national project consultants of in each of the countries. I must say that particularly Thomas and Lixia were key experts on our side who supported the whole process from developing the methodology of the surveys, the contents of the reports, and who guided the finalization of the studies together with the AFRACA team. So we're very pleased with that. And we can say it was true teamwork. And I think that all involved can be proud on the outcome and on their contributions to this very important work. Of course, for those of you here in the webinar, if you are interested in the reports that were prepared for specific value chains or specific countries, I would invite you to please contact either the CAFI SSF Secretariat through the CAFI SSF email or the AFRACA Secretary General, Dr. Thomas Essel. We would be happy to share with you the reports that were prepared. They are not going to be published online, but we are happy to share them with interested experts. Finally, I would like to thank, of course, as always, Suchitra and Doigo for organizing this nice CAFI SSF webinar, and all of you, all the participants, for having participated today. I hope you all enjoyed the presentations and discussions and will use the knowledge and information shared in your work. We look forward to seeing many of you again in future CAFI SSF Network webinars, hopefully next year. And in the meantime, please continue sharing information and experiences through the CAFI SSF Secretariat and its LinkedIn page. So thank you all very much again. And Suchitra, over to you for the final closure. Thank you.
Thank you. Thank you, Dr. Raymond, for giving us the overview of the entire team's efforts that have gone into this project for since the last 3 years. That's been a great job by the entire team. With this, I would like to thank each one of you all today, starting with Mr. Gilles, Dr. Thomas Gidson, Mr. Essel, the Secretary General of AFRACA. It's usually our mandatory that each year we do at least one webinar with our regional partner organizations, and we were trying our best to see how we could kind of have this discussion. So at least it was the end of the year, the last webinar for this year, and our 14th the webinar for this year. So we are glad that we could do this and co-organize with you all. And it was really amazing to hear about the great strategy, the overviews and share thoughts that you have shared, Mr. Essel, for this, for the Africa region. I hope more countries kind of begin to think on these lines. The fact that the training and capacity building now is kind of the key to ensure that how the fisheries finance can be scaled up across regions. We have today, we've had participants who have been experts, organizations which have been experts in fisheries finance, who are also our members, countries from India and organizations from India, as well as we have the other ends who would like to kind of ensure that fisheries finance begins in their country. So we as a platform are here to bring these kinds of initiatives and share the best practices across regions and provide support wherever we can. For all those who may not be aware, CAFI SSF is also, we are not just a knowledge sharing platform, but we are also beginning a training and capacity building initiatives in Sao Tome and Principe to bring about, to sensitize and bring about self-help group concepts in these countries. So this is a small initiative that we are beginning, and I hope our member organizations will support us in this initiative and we can take this forward. So with this, I would like to bring the webinar to the closure, and we would welcome any suggestions. Please provide us also feedbacks and any thoughts that you may have as to, what kind of topics you all would want us to bring going forward. So thank you to each one of you, and thank you, Dr. Raymond, for all the guidance and support that we have received from you. Thank you, and have a good evening.
Thank you.
Thank you.
Thank you.
Yeah.
Have a great afternoon, evening, morning. Bye-bye.
Great,
Thank you. Bye-bye.
great day too. Bye-bye.
Bye.